Hi, I'm Jill Byler, the Operations Manager at Arizona Wholesale Mortgage Inc. And today we have here
Jared DeLuca. I'm a loan officer and a realtor.
And today we're going to talk about borrowers who are self-employed. So self-employed getting pre-qualified is a little bit more different than our typical W-2 or 1099 borrowers. So Jared used to be an underwriter. So from an underwriting standpoint, you're looking at a borrower, he's got 780 credit score, assets in the bank, but what are you looking for someone who's self-employed borrower?
So basically, from an underwriting perspective, looking at the length of history that someone has been self-employed and the history of that income. Generally, an underwriter is going to look at that income based off of either your personal and or business tax returns. And one thing that actually would surprise a lot of self-employed borrowers would be to find out that they don't qualify for quite as much as they thought they did because business has been really good for them. So it's confusing. Why am I not qualifying? I make X amount of money. It should be more than enough. But from an underwriting perspective, an underwriter is going to, again, look at generally a 2-year history of income that's reported on your tax returns from self-employment. They're going to deduct out of that certain business expenses or business liabilities that someone may not actually really be thinking about.
So give me an example of things that get deducted. So I like to, I have a business and my business owns my car. Is that something that you're going to deduct?
Where the business owns the car. Initially, if that's on your credit report, it may still be counted against you even if the business is paying for it. You may have to turn around and show that the business has been paying for that car payment or some of those auto expenses for at least a 12-month period. Another thing is meal and entertainment expenses, which can usually be a big deduction for self-employed people, but it does get counted against you in the mortgage qualifying process.
But what if I'm in the advertising business and I'm taking out my clients and my job is to wine and dine them? That's my job.
Right, and that's something that can make you very successful in your business, but it will still count against in some way or another when you're going through the process of getting a mortgage. It doesn't mean that it's going to ruin your ability to qualify, but it's things that people don't generally take into consideration that a lender or a lender's underwriter behind the scenes is thinking about and deducting when they're calculating their income averages. So be prepared. That may be a surprise for you as a self-employed home buyer that income may not be exactly what you think it is. But again, that's why it's important to have a knowledgeable lender who can help walk you through that process and help answer your questions.
Well, thank you very much. Well, thank you for joining us today. We're going to have a series of short videos here on our website, so feel free to check us out. And thank you for joining us today.